Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Let's move over to PayPal. If you want to pull that up, looks like the net revenues was $6.85 billion, up 11% on a currency neutral basis. Operating cash flow of $1.9 billion, growing 29%. I'm just kind of going through these highlight numbers as we get these earnings per share. Now, this is a company that you would expect to be more profitable than Block. And so I think that's one kind of distinction there, because they're a little bit more established, a little bit of they've been less in growth phase and more in kind of increasing that margin phase of their business over the last couple of years. Although, maybe they've still been growing really nicely. Yeah. What are you seeing from them here?
Well, so they did in the last, let's say right after the pandemic started to focus on all these other things, and their free cash flow, while they are still much generating a lot of free cash flow, their free cash flow took a decent hit, especially in 2021. I think that was way down for them historically on a margin perspective. And I'm looking right here. It says that they generated $1.8 billion in free cash flow for the quarter. Now, That says it's up 37% year over year. Granted, I think it was muted last year, so the growth rate, take it with a grain of salt, but still $1.8 billion in a single quarter for free cash flow. That is quite significant. And that, to me, is something that I really like.
Total payment volume. And again, we just talked about Block and their Square app. I'd have to pull the numbers up again, but growing really, really well. They had total payment volume growth of 9%. So in the single digits, not in that double digits. Again, it's not quite the same growth company that Block is. So that's something to kind of just weigh as an investment. You would maybe weigh these or value these companies a little bit differently depending on whether you're focusing on the bottom line or the top line. So I think that's something. Financial guidance. They did issue guidance for the fourth quarter of 2022. Net revenue expected to be around $7.375 billion, growing 7% on a spot basis and 9% on a currency neutral basis. So again, this isn't a 50% growth company. This is a high single digit growth company, which I think could be fine in fintech. But that's kind of what we're seeing there. Anything else that popped out here to you from PayPal? And they aren't reporting anything I know they've started to move into some crypto transactions and NFT sales and stuff like that, but we're not talking about a meaningful piece of the business like Block, like the Cash App is, or we'll talk about Coinbase in a minute. But that's not a meaningful part of the business for them. So, and I think that is maybe one of those things where maybe that's okay. This is more of a legacy company than the other two. And I don't know, maybe they don't even need to get involved in that. Just kind of do what you do. You're making more money than either Coinbase or Block at this point. So that's probably not a bad thing.
Yeah. I'm seeing here that some partnership with Apple here for its merchants, for the merchant-based customer, the merchant customer base. There, I finally said it. So what do you think about that? Leveraging Apple's tap to pay on iPhone technology. I think that was already the case, but soon be able to. So basically going with Apple for the hardware, whereas Block kind of has their own stuff, but it looks like they're just going to team up with Apple to provide these kind of services to their merchants.
Well, hasn't Block announced something similar? I'll have to look this up. But yeah, I do think the idea of having the tab, I mean, I think the PayPal one is a triangle, right? And the Block one is a square. That's kind of outdated technology right now. What we're moving more to is just tap your phones together. If you're a fireworks merchant, who's just open for 1 month a year, you don't want to buy a whole bunch of infrastructure. you just want to use your iPhone or your iPad. So I think that both of those companies are moving towards that.
Yeah, I mean, it would make sense. That's where the market's going.
I wish they did a better job of laying out their business over time, because they do this where it's just kind of year over year numbers, but a lot has happened in the last 4 years
Yeah.
in this space. So I don't see anything surprising from PayPal. I'll look at what's the market's reaction here.
Not liking it.
Down 8%. So I do
I
think
think that's going to be an all-time low. Or not an all-time low, but a
recent low for sure.
5-year low, 6-year low. I mean, it goes back a ways since PayPal was trading in the 60s.
Yeah, I think you're right. You're talking about 2017. It's interesting because I think as we were going through the Block report, there's just a lot of eye-popping numbers. It's big double-digit growth. Okay, the Cash App's growing, payment volume is growing, subscriptions are growing, and then you look at PayPal and you go, this is fine. High single digits. There's a lot of companies that would love to have high single-digit growth and really strong free cash flow. The market does value growth, though.
Here's an interesting number. I finally found it. 939 million in share repurchases in the quarter. So about half of their free cash flow for the quarter went to share repurchases. And I think that has to be a large part of your investment thesis. If you're investing in PayPal, it's not going to grow the way that Block is right now. I mean, unless something happens that we just can't see right now, but its business as it is right now, it's not going to provide the Cash App type growth. And so you have to start thinking about shareholder returns. How is the company going to use that free cash flow? Because you can destroy shareholder value by not properly allocating that money. And you can be a market beating investment with share repurchases and that kind of thing. It's just a matter of how you're going to play your cards.
Yeah, I've always liked just pay a dividend rather than buy back stock. Because the other thing that a lot of times what companies do is they'll basically buy back enough stock so that they're not so that stock options and RSUs that they're giving to employees aren't dilutive. And
that's a fair
you suddenly
point.
look back in over 10 years, you've repurchased $200 billion worth of stock, but the share count outstanding is flat.
Yeah, the same. Yeah. I think that they had somewhere in the ballpark, I just saw it. I think it's somewhere in the ballpark of 200 million. Yeah, 226 million in stock-based compensation for the quarter. So to your point, yeah, call it a net 700 million repurchase.
Here's one thing I wanted to highlight here. Total payment volume, $337 billion, growing 9%. I think Block's numbers from the Square side of the business was not pulling out foreign transactions. So on a equal comparison basis, they're going 9%. Block grew 19.9%, so growing twice as fast. That's, I think, what investors are probably thinking about with their reaction right now is how do you want to value a company that's growing far more slowly than Block? Because eventually that becomes a real problem. If it doesn't take very long to growing at 20% versus 10% for a company to just kind of get inundated. So I think that's something I would think about if you're a PayPal shareholder. I think I have a smaller position in PayPal than Block just because I haven't liked the business as much. But it's a very different growth story. This is a cash flow story. So now are you going to have to start valuing this business based on free cash flow alone and not on growth? That could be problematic.
So I did a little bit of math based on where the stock is trading after hours, based on their free cash flow in the third quarter. Now, I don't know if that's something to be expected going forward, but let's say that they were to generate the same amount of free cash flow for the next 3 quarters. They are trading at 11 times their free cash flow, their free cash flow run rate. How about that?
Yeah,
That's fairly cheap.
That's pretty cheap. That's I think what we're going to see here is the market over indexing on one way or the other, right? It might be, hey, we're under anticipated how much companies are going to grow, and maybe even I was looking at Meta today, and if you just look at, I mean, like if they just nix their entire Reality Labs business, I really think that stock could double.
Yeah,
you know, because they're making so much cash from their core business. So yeah, there is going to be kind of a bottom there for some of these companies. I mean, if you start trading for 10 times free cash flow and you're an established business like PayPal, there's a lot to like there.
Yeah. I mean, especially, right? I mean, investors hate uncertainty. It's okay sometimes to buy a PayPal where you're like, you know what? It's not going to knock the doors down, but I'm going to be able to sleep owning this company in my portfolio. I know it's going to be there.
Well, exactly. And, you know, they have ties to eBay. Look, eBay is still around. Like,
I like eBay too.
It didn't become Amazon.
Yeah.
But it's still there. It's still a good business. You know, these businesses that have two sides where you have a merchant side and a buyer side, they're really sticky. They're really, really sticky. And the thing for PayPal is even if new merchants are choosing Block in the Square ecosystem over PayPal, that doesn't mean that their old merchants that are already on the platform are going to move, because the payment rails it's still credit cards. You know, it's still the internet. It's still none of that stuff is changing. It's not like they're getting disrupted by Block. Block is just growing more quickly. So yeah, I think that probably is the takeaway, is that this is a company you're going to want to look at their free cash flow, and that's how you're going to evaluate. It's not going to knock the doors off with growth, but I mean, hey, high single digits for a company growing or trading at 11 times free cash flow, hey, that's pretty solid.
Indeed.